Hello, welcome to Dissident Canada. My name is Tyler. Before I start the video, I just want to say uh, all my points that I have made about Trump's involvement in the Iran-Israel, what is now being, or what Trump is trying to dub the 12-day war, still holds. Still holds. I know there's an apparent ceasefire. I am, recording this on Tuesday. The ceasefire is already being tested by both sides. It is not, in my opinion, going to last. There's most likely not going to be a peace deal. We may just have, at best, an armistice that lasts as long as Trump's presidency. As soon as he's gone, all bets are off. I don't even think it lasts that long, as can be seen by Netanyahu's poking of the Iranians and then the Iranians returning fire for me this morning. So I was going to do a video about specifically all that, but I woke up and saw that the Duran had done a live stream and they hit all of my points that I wanted to impress. So I highly recommend you go check that out instead, because I would just be repeating all the points that I have already made, that they've made. But yeah, this is, nobody out of this mess comes out looking good. It was a bad fucking fuck up, and it will continue to be a bad fucking fuck up. There is no ifs, ands, or buts about that. But now that the, at least, media narrative is going around that the guns have cooled, let's take a look at the economy and see how actually bad it is. So, let's just look at the U.S. Treasury yield curve, because that's real screwy. I still want to do an in-depth video about the yield curve, but I still want more normal-ish time period to happen, because this dust up has still created economic uncertainty in the short term. But if you look at the yield curve at the 1 to the 5 year, the U.S. Treasury yield curve, okay? I'm just looking at the first week of the month, specifically the 6th of June, all right? Comparing the 6th of June to the 23rd of June, all right? Interest rates are in this, at the 1 to the 5, which are the most important, because this is your short-term or mid-term outlook on inflation expectations and growth as well. But if you even extend it out to the 10-year, anything past the 10-year really doesn't matter. It almost holds true there. Like, the 1 year is just shy of 20 basis points lower. Yeah, it's just shy. It's 6 points lower. And then the 2 to the 5 is all around 20 basis points. The 7 is, it's about 20 as well. It's a little higher. The 10 is about 10, which is kind of what I would expect. What does this mean? Well, the rush to safety and liquidity is back on. Now, if you're out there thinking that U.S. treasuries are unsafe, no, they are extremely safe, because there's so much U.S. debt outside of the United States. It's approximately, at least, bare minimum, $100 trillion of U.S. debt floating around outside of U.S. territories. Okay? People need to pay back that debt. Well, a good way to make sure you have a way to pay back that debt, or to get access to that debt if you need US dollars, which everybody does, is to own a US treasury, because it's a dollar plus. Like, if you need to, you can always sell them $4, or you can hold on to them and put them in what's called the repo market, which is just repurchase agreements. You can either buy treasuries with the caveat that you're going to sell them back with a percentage, or you can do the counter version of that thing, which is you put U.S. treasuries up for sale and you're going to get a percentage back because you're putting good collateral, because that's what it is, on the market for use of other people. Or you can hold on to them and get the coupon payments. So depending on the contract of the bond, you are going to get at least a yearly payment, typically it's twice yearly, payment of US dollars from the US Treasury to your bank account, or wherever you're holding the treasuries. So you're always going to get dollars, really good. And when liquidity in the global financial system becomes an issue, there's a whole pile-on effect into US dollars. Okay, so that's showing extreme weakness because we just had, all right, massive dust up in the Middle East. Like, this isn't like some small bullshit border dispute. This is massive dispute, even though, it's so far only lasted 12 days. Highly doubt it's going to stay only at 12 days. It'll go longer, even if it's just in a Cold War variant. If you pull up the CAD USD trade, you can see that the Canadian dollar is maybe not mostly recovered because, we had a nice big spike up there. But we're pretty much there. We're still a little bit under 60, say 70. What is that? 70. It's not basis points, but it's not 70 pips, because pips is whatever. You're 0.007 away from the peak like last week in the trade. But if you look at the 6 month, we're still way up from where we were 6 months ago. Has the economy changed for the better? No. So what's mechanically going on is, if you hop over to the DXY, which is the dollar index, it's going back on its downward trend. So what is happening is people are taking US dollar assets of various kinds, selling that, getting the dollars, selling the dollars in essence, even though it's just really just a swap for dollars to local currency, and then paying off local debt. So here in Canada, why the Canadian dollar is up is Canadian banks are taking their dollar assets, selling them, a percentage of them, getting US dollars, selling the dollars, having Canadian dollars in exchange, taking the Canadian dollars, paying off their debt. As the debt load decreases, so the amount of debt in a local currency decreases, the demand for that currency slightly decreases, but it mostly remains the same for as a ratio. But now, as you are paying back debt, you are destroying effectively the currency, the amount of currency units in the system. So demand's relatively the same as a ratio, but the amount of currency has decreased. So value increases. But this is really only tracked versus the US dollar. The internal value is much, much higher than 1 because of the debt ratio. So, but that just shows, if you look at Canada right now, if you there's nothing good in the economy. If you go listen to or read any of the statements that come out of the Bank of Canada, it's like, oh God, we don't know what to do. Fuck. That's what's going on. I still think, all right, barring any, black swan military event, the Canadian dollar does a repeat run of what it did in in what the 2008, in which it goes to, I don't know if it can reach parity anymore, but there's a high likelihood that it reaches parity with the US dollar, or say within 20%. Like, we're almost already at that 20% figure. Like, we're at, it says 72.93, but like when you're actually exchanging, that's 73. So we're really close to that, within 20% of the US dollar. I think it could really reach parity or even slightly above. If, for example, the dollar milkshake theory presented by Brent Johnson is correct, and you really do start to see massive, massive sell-offs in the U.S. Treasury yields, or in the U.S. Treasury, in the bond market, all right? Say, specifically the 10, the 20, and the 30-year. I guess you can throw in the 15, but it really doesn't matter. Possibly even the 7-year, where it goes, where there's so much selling because there's such a need for US dollars, or either need for dollars or need for just cash flow in general. It could be either. We'll have to take a look if that ever happens. You could see a selling of dollars that could bring the Canadian dollar up to, say, you're getting like a 125, maybe 130. I don't think you can go higher than that at this point in time. But I still think that outlook of being around a dollar, say within 20% of it, by the end of next year is extremely likely. Okay? If you look at the 6 month of the dollar index, you're down a little over 10, which is significant. And it's specifically if you like go back to, say, like the ramp up into the beginning of this year, like there was a growing possibility, okay, that the DXY broke 110 and was like on its way to, say, 115 or 120. But the mechanics of the euro dollar took over, and you've got that selling going on. But the big thing, all right, is if you look at oil. Oil is a massive indicator for economic health, all right? The trend of oil going down, all right? Like, I just bring up, like, it is a multi-year downward trend of oil going down, even with, the spikes of dust-ups in the Middle East and Ukraine. It is going into this multi-year downward trend from the massive lead-up and spike for the Ukraine, Russo-Ukrainian war. Okay, you got like a couple of big dust-ups. You got like a what's it called? A double top going on there at like the above 120. But then it sets this growing downward pressure. There's a little bit of a run up towards October 7th. Steady state, goes down, a little bit more of a run, like, because markets don't travel in straight lines. But you have this massive downward trend, and we have effectively returning to that within a day and a half of hostilities looking like, or at least the media narrative of, oh, this is not going to be the big dust up that we all feared. And even with the fears of a big dust up, it didn't sustain like $80 a barrel. Like, you didn't have a $20 jump from, again, a massive escalatory event with not only the Israelis hitting Iran, but the United States jumping in as well with what appears to be extremely ineffective strikes on Iran's nuclear facilities. Again, I'll just mention, like, specifically Fordo. There's approximately 90 meters of granite, almost 9 meters of, reinforced concrete. So that's concrete and steel. And bunker busters that were hit that thing that are really good at hitting, say, 60-meter deep targets. That's their penetrative depth. Did they do damage? Yeah, it's not destruction, a total destruction or obliteration, whatever Trump used. Subject matter experts on this have come out and repeatedly stated that to destroy Fordo completely, the minimum is a tactical nuke. Okay? That's the type of damage you needed for that. But we had the threat of the Strait of Hormuz being closed. It was temporarily closed. I was watching ships being turned away, even Chinese tankers. And it could not send WTI crude to sustain a spike over $75 a barrel. There was like a 10-minute blip, if that, of like $78. All right? Why is this important? Okay? Well, oil sends the signal of deflationary pressures. Okay? If you have oil spiking, there comes a point where you're going to, reach a deflationary bust, obviously, right? People won't be able to afford it unless, you have medium household incomes keeping up with that rate of increase in oil, which hasn't happened in the last 5 years. So in other words, you reach a point where you hit peak price relative. People can no longer afford to it. They adjust their habits, and demand for oil goes down. Oil is basically in everything. Like, even in those, as I will call them, retarded electric or hybrid cars, even though there's one hybrid car I like the look of. The Toyota Crown. Oh my God. I don't know exactly what does it about that vehicle. Go look at it. It's a very interesting vehicle. I just wish it was either a gas or diesel engine. Anyways, hybrid cars, electric cars, have a whole shit ton of oil in them. Okay? They have an increase in plastics, whether that's the wiring or the sheer amount of PCBs, printed circuit boards you need to operate an electric car. I mean, there's also shit tons of other things with oil in electric cars that they consume a lot of fucking oil to make them. Okay? Even with, saying the switch to electric cars, at least in Canada, continuing, like, oil's going down. Demand is dropping. Manufacturing at the same time is also dropping. And that's not just tariffs. This is a multi-year trend of manufacturing going down. Like, the amount of products being produced is going down. The amount that people are spending is going down. The amount of debt people are accruing is going up, but that's because incomes have not kept up with price increases, which means there will be a deflationary bust of some kind. Like, sure, the cost of living is going down, but it's not due to any type of increase in productivity or, again, medium household income. Like, there's no good signs that I can see. I mean, the only ones that I can really see are in the United States, and it's not enough. And those signs are with the deportations in the United States, voluntary and involuntary, that are happening in America, okay? You are seeing a slight increase in job growth for naturalized, or the natural born citizens of natural born Americans, okay? The Americans are being rehired at a slightly higher rate, okay? It is not enough to buck this trend. You would have to have, again, millions of people rehired, well, not rehired, but find a new job in this year to attempt to buck the global problem. Because that's what the economy is. It is a global thing. If you have too many dominoes fall in the globe, the entire system has a freakout. 2008 taught us that. Everybody should learn from it. Nobody has. Yes, Canada was affected by the great financial crisis, even though it really wasn't finance. And crisis, yes, but financial, it was a money problem. Anyways, that's just a quick look at, again, some factors that, again, lead me to believe we are going in the same direction as 2008, a deflationary bust. Like, if you can't get oil with a serious escalation in the Middle East to a minimum of $80 from setting a downward trend that was really looking at hitting 55 and sustaining that at if not lower, okay, through the summer driving months, by the way, you're like, you've got some real bad economic indicators, and anybody out there telling you, nah, it's fine, they're lying their asses off. Okay? At best, Trump is looking at being able to rebuild America on the upside of this in like 2 years at the earliest. Like, even if, let's say, in the next month and a half, all the tariff issues are worked out with United States and Canada, because, Dissident Canada, let's focus on Canada for a change, okay? The Canadian economy isn't going to have a bounce. Not a fucking chance. Car sales are down. House sales are down. Just retail spending is down. Tell me where that changes. And again, these are multi-year trends that started like 3 years ago. Almost exactly 3 years ago, by the way. Okay? The problem of the banking crisis in 2023 did not go away. You just saw there wasn't, at that time, systemic contagion yet. The question is, how much systemic contagion is there? That's the real question. If too many hedge funds get margin called, oh my gosh, there is a lot of systemic contagion. Right now, it's basically on hedge funds. That's the video for today. See you with something tomorrow. Not exactly sure what. We are dealing with a very uncertain time period. There could be a whole bunch of stuff. Maybe I'll talk about Bill C-5 and why it's really just, covering the government's ass. Because, again, Section 1 and Section 33 exist in the Charter of Rights and Freedoms. We'll see what I can come up with, if I can get a good white pill this week. Non-nuclear fire is pretty good, but, the ending of Iran, Israel, and U.S., it's not looking pretty. It almost guarantees nuclear non-proliferation is dead. Just because we're not dying in a war yet doesn't mean it was a good outcome. It was better than the worst outcomes, but we'll see. Anyways, that's the video for today. See you tomorrow. Till then, have a good day.